All right, good morning, guys. So I wanted to teach something that it's not just powerful, it's effective, um, which if you continually use it, you're really going to make a whole lot of money from it. But it's strictly going to be on synthetic indices. I'm just going through some of my crypto sets. So anyway, let's get into business and see what we have. So I'm going to be explaining the concepts shortly. It's not really a big deal, but it's going to really change your perspective as regards trading and give you deep insights. All right. When I say deep insight, yeah, I mean what I'm saying. So, okay, so let's point out a few things. Let's set our rules and every other information, of course, we would be needing to trade this pattern very effectively. So all what we are looking for is bullish engulfing, right? So we're looking for bullish. Okay, let me just use this. So so what time frames are we using? H4 or H1? Or let's just keep it at H4, N3, M15, N3. I know I've taught this before, but I'm bringing more revelations to this. I just hope I'll have enough time. There are a lot I want to teach and there are a lot I want to show guys, but hopefully you'll get it. Time frame H for our N3, M15. So for sale, you look out for bearish engulfing. Buys, you look out for bullish engulfing on H4. So where are you looking out for these candles? It has to be on H4, all right? The H4 bearish or bullish engulfing is your POI. You switch to M15 to look for other blocks or same bullish or bearish engulfing for N3. Use 50% for snipers. This is all there is to know about the rules. All right. So rule number one, time frame or bullish engulfing. Probably the pattern, something like this. If you go on the YouTube channel, be combining it with FVG and liquidity sweep, you're going to blow your mind. Anyway, let's go on. So POIs are those levels you intend to see. What are you looking at coming to the POI engulfing you've marked? All right. So let's go to the chart. Let's just go straight. Let's work. All right. There are a lot of things I'll be teaching and showing you as time goes on. So let me start from volatility. Let's say jump 10. All right. So there's something I wanted to teach, but I was a bit skeptical. If I teach it, a lot of you will get distracted. I don't want a situation where it feels like I'm using so much strategies. Do you understand? So work with these back tests. You would be amazed at the results you're going to get. All right, so this is a bearish engulfing, all right? So this is a bearish engulfing. What do? We mark the bearish engulfing. And also note this bearish engulfing, which you can see here, broke structure, all right? If we take this out and then zoom in very closely, you can see that it took out a structure here. All right. When we switch to lower time frame, we'll see. So we mark the bearish engulfing as our what? POI. Most of you already have this indicator. So we'll mark it as our POI. If you don't want to switch to a lower time frame, you can use the 50% of this for your entry. And what do we have here? This is 50%, all right? But that's not the condition as to which we ought to trade it, right? But you can see just following this, it worked effectively, right? I'm trying to be slow so that those who are new in trading, you can catch up. And I'm using terms that are conversant with everybody. Right, so let's switch to H1. So let's mark these levels. Yeah, the bearish cross is also an engulfing, but this time around, it does not sweep the wick, the top wick, but it sweeps the body. You can still use this, all right? So, but make sure that the body has swept the wick and the previous candle, so you're good to go, right? So here we have a bearish engulfing, okay? We have a bearish engulfing clearly highlighted. So let's switch to H1. Remember, it's M15 we're using as entry. Now, on H1, what are we looking out for? We are looking out for a bearish engulfing. Are you seeing this bearish cross inside the H1? So you can use the 50% of this here, of this guy, the bearish cross, and selling from this point up to this point. I mean, that's a whole lot of money considering the fact that this is H1. But of course, that is not why we are here. What we are basically doing is what? Looking at M15. So let's just go to M15. So this is M15. Now, please note, where did the break of structure happen? Here. So that's why we marked it on H4. Now, because the candles are no longer showing, we have a change of character at this point. I'm trying to make the line it. Well, we can just manage it like this. All right, so we have a change of character here, telling us the price, the possibility of price selling is here, is there, right? So what are we looking at for? Bearish what? Engulfing. So for those of you who don't know what an engulfing candle is, which I believe as a trader you should know. So a bearish engulfing, so we are just going to make this red. A bearish engulfing is an from the word engulfing, it covers the previous candle. So this part's weak, all right, at the top. A bearish engulfing may sometimes, so this could be a bullish candle prior, the bottom part. That's also fine. But in cases where it covers this part, bearish engulfing as a PI, of course not. So what I do is I engulfing so that I could have my 50%. But in a case where the engulfing candle covers both the body, this other block becomes irrelevant to the bottom of the bearish engulfing, and then of course use the 50%. But in cases where part of the body, that's also fine. You know, some school of thought say you can pick from here, but me, I just prefer previous count everything, you know. I want a situation where we don't miss the entry. All right. So this is literally what an engulfing is. Something that encloses something. All right. So what do we have here? We have a bearish engulfing, very clean and unmitigated. So we mark. Now, when we mark this midpoint, which you see here, is the 50%. So this is not trading view. If not, this is jump 10. Let me see. Um, if I have it here. Then let me just show you guys that. Okay. So I'm trying to, this day was which day? 23rd. 23rd. Please stay with me, right? December, I don't know where I am. Please forgive me for the 24th, 12th, November 12th. I don't, okay, I think I know what to do. So I think this was the guy we were working with. I don't know why I'm finding it hard to locate. How far are we from the original charts? Is it that far? Oh, I see, it's really far. All right, no problem. We can around 22nd December. All right, so around 22nd December. Yes, so 22nd December. Sorry. Yeah, 22nd December. I just want you to see on trading view. So here we go. Let me just be sure it's the right one. Let's zoom in. But you could already see the magnitude. This was already a successful trade. It's just that 22nd December around 21:15. Good. All right, I think I have it. This was the bearish engulfing. All right. And then if we took a sell from the 50%, you can see this is the 50%, this midpoint here. If we took a sell, our stop loss should be, and then most times, you know me, I like keeping it at 1:3. But you could see that it went even further down. All right, it went down. So this was how you would have had that beautiful, nice entry on job 10 for our time frame. Let's look at a few more examples. It is super, super good. All right. So I think I had some. So jump 100, we have a lot, a lot. Let me keep this here. So this is jump 100 right now. And let's look at the first one. We have this bullish engulfing. So we mark, right? Our plan is to see if we can enter off the 50%. So I'm putting this here. All right. Now, the 50%, like I told you, always has this sniper. So even if you personally don't want to go to the lower time frame, just trading off the 50% is enough, right? So we had this here. Let me mark this other one too. This is a bullish cross. I could see that it swept the previous candle. And then we can go to M15 and then trace what happened there. So let's look at the first one. So this first one, this was the midpoint, don't forget. Of course, there was a break of market structure towards the upside, telling us that the market wants to go up. So we have this break here. Right, we have this break here. So this is a change of character. I don't know where price is coming from, but you can see that this is a neat break, indicative that price intends going upwards. So at some point, maybe next subsequent videos, I will teach you how when things like this show, all you need is liquidity sweep with a candle confirmation to take entries like this in case price hasn't tapped into your 50% yet. But let's stick to the plan. All right. So if we move further, you see that price actually came, though it didn't get to the 50%, unfortunately. Let's look at H1. That's same. We have, all right. So we can refine this. Look at this bullish engulfing here. So in this particular uh bullish engulfing, price didn't come back to the 50%. That's fine. Not every trade. I don't think we are going to get every trade. So let's look at the previous one. Um, we have this one here. So on H1, we have that 50% still there. This 50% came with an order block, all right? You can see that entering off this, you would have had a nice move. So, but let's go to M15 and see what happened there. So on M15, I could see a lot of bullish engulfing from where we could possibly take entries from. All right, you could see this other block here with a bullish engulfing. Was there no other bullish engulfing here? We have another bullish engulfing here. So, but let's see what happened. If you go forward, you could see how price came towards the 50%, which was this midpoint. But in that case, it didn't also tap. This case was a situation whereby the 50% wasn't tapped. However, considering the fact that M15 presented us some bullish engulfing, remember, when we switched to M15, we could still use the bullish engulfing. So this was a bullish engulfing on M15. So we'll mark it with the order block. And then if we extend this guy, let's extend this guy. We would have gotten that trade, of course, I believe so. Then let's, so that we're sure, right? Look at this. So it's actually very effective. It's that good. The next video, I will show you how to use it with LVGs. Let me just show you one more example. So take a look at this. This is a bearish engulfing, right? These are all successful trades taken. So why I said H4 is because it will force you guys to be patient. And H4 just naturally makes you take high probability setups, you see. It's not because you can't do this on M5 and M15. You would need some level of skill, FVG, inducement, and some liquidity concept understanding to trade those lower time frames and make money off it. But I just needed to keep it simple, all right? So bearish engulfing, where's the 50%? So you, like I said, even if you don't want to trade on the lower time frame, you can set your pending orders at 50% and you still be fine. All right. But I personally like a smaller stop loss, hence I always just choose to go back to M15 to do my thing. All right. So what do we have here? So we have this order block sitting at the 50%. Remember, we said there needs to be a bearish engulfing too. So if you look at this, we have this bearish engulfing here. And you could see how price reacted at this, though this was not the 50%. But at the 50% was presented this order block, you see. All right, so if you just mark this order block, extend, extend. You could see price reacting at that order block. You could see those beautiful reactions there. See, so this is good, guys. This is super, super good. So when you take 50%, your stop loss tends to be smaller, and then your risk tends to be better than. So we have this bullish engulfing here. I'll be looking out for price coming back into the zone. So I can go on and on. Just backtest yourself and tell me in the comment section what you feel could be your challenge. Just drop your questions. What you want to see in part 2. Let me know. All right. It's just a short video, but super powerful. Trading it doesn't have to be complicated. Just keep I was supposed to do 1 hour time frame, but I don't want you guys to get so excited. Stick with the H4 for now, and let's see what your outcome will be. All right. Thank you very much.